Hi everyone. Let's now revise our chapter of appointment and remuneration of managerial personnel, right? This particular chapter has sections 196 to section number 205. Not a lot of sections, but two very important sections of your curriculum, that is section 196 and 197. So we will start with the appointment part. Every company has some executive directors as well as some non-executive directors. The executive directors, that is MD, WTD, along with the manager, is termed as managerial personnel, although not defined in the act, yet we come to know that we are going to talk about their appointment, we are going to talk about their remuneration along with remuneration of other directors as well. The direct appointment of other directors we have already discussed in the chapter of directors. Moreover, if it's a managing director or whole-time director, there also we have discussed the appointment already. Now, appointment has to be in accordance with section 152. Undoubtedly we know that. So we have section 152, we have section 160 for the appointment, and here the appointment is going to be in accordance with section 196. Clear? A manager plus whole-time director is possible. Manager plus MD is not possible. Managing director plus whole-time director is possible. So you cannot have a manager and a managing director at the same time. Simple reason being because manager is someone who has almost all the powers of the company, and managing director is also someone who has substantial powers of the company. So I made that chart for you, right? Made that diagram for you, rather a circled diagram in which we are able to understand who a managing director is and who a manager is and why they are not possible at the same time in the same company. So no company can appoint a manager as well as a managing director at the same time. Whoever you appoint, their tenure is going to be maximum for 5 years. This does not apply to a government company. Right, so a government company may have MD which is going to hold office for 10 years, not a problem, right? But otherwise in all other companies, including a private company, you cannot have MD, WTD or manager for more than 5 years. So at once you can appoint for a maximum tenure of 5 years only, but before this 5 year ends, when 1 year is left for ending these 5 years, you can have reappointment. Right, so reappointment not earlier than 1 year before expiry. That means you cannot do that you have appointed a managing director on 21st Jan and on 22nd Jan you reappointed that person for another term of 5 years. No, it cannot be so quick. See, after 4 years we come to know, yes, about the work, how they have performed, how they are performing. So once we very well know about the work, then is the right time when we can go for reappointment. Reappointment is permissible before expiry of term, simple reason being because we don't want to hinder the flow of work. These are people who are involved in the core work of the company, right? Not exactly the core work, I would say the core management of the company. So the company cannot function without them, and that's why their reappointment is possible even before expiry of their term, but not earlier than 1 year. Section 196(3) tells us about disqualifications of appointment. That is, who can be appointed as MD, WTD or manager. Such person has to be within this age limit. Should not have attained the age of 70 is the language of law, although here I have mentioned 69 is the maximum because ultimately that comes out to be the solution. However, what you will write in examination is that at least of 21 years age and not attained the age of 70. Lesser than 21 is not permissible in or any case at all, but supposedly we have a very experienced person who is more than 70 years of age, who has attained the age of 70 or is even more than that, his appointment is also permissible provided SR is passed. Supposedly SR could not be passed, but the votes that he has got are more in favor than against, then we can take the approval of CG and we can still appoint such person. Okay. What are the other disqualifications? Someone who is undischarged insolvent, someone who has ever done suspension with the creditors, someone who has been convicted for imprisonment for more than 6 months. Such person becomes disqualified for life. He can never be appointed as MD, WTD or manager in any company. Okay. Now, appointment requires approval. There are 3 stages, my dear. BR in BM, OR in GM and central government approval sometimes, not always. So there can be 2-stage process also. Board resolution in board meeting, ordinary resolution in general meeting, and that's how the appointment of these people will be made, right? This section of approval does not apply to private company. So in private company, you don't need this approval by central government or this approval by in general meeting. No, nothing required at all. In case of government company also, this subsection does not apply. So if it is a government company and someone needs the approval of CG according to this particular section, for that company, it will be exempted, right? So by far, MD, manager cannot be appointed together for 5 years at once. Then certain disqualifications, that is minimum age 21, maximum age 69, it cannot be 70 or more. If it is 70 or more, SR needs to be passed. Undischarged insolvent, not allowed. Suspension done with the creditor, not allowed. Then you have been convicted for more than 6 months, not allowed. After that, what is the process? The first step is to call a board meeting. Now, in the board meeting, you pass a board resolution, you appoint MD, WTD or manager, and in the next general meeting, you need their approval. So, in the next general meeting, you take approval. So, whoever is appointed by passing board resolution is being clearly told that this appointment is subject to the approval in general meeting. If it is approved, then great. If it is not approved, then you have to vacate the office. However, your prior acts, whatever you have done as the managing director or whole-time director, shall be considered to be valid. Okay. Whenever you appoint someone as managing director, WTD or manager, you have to file a form. For appointment of KMP, for appointment of director, we have a form DIR 12 for filing within 30 days of appointment. However, this form is not required because for managerial personnel, these 3, you have a form MR1 which has to be filed. MR1 has to be filed within 60 days of this board resolution. Within 60 days. This marks the appointment of managerial personnel and it is the intimation to ROC. Now, in certain cases, you need the third approval as well. 3 stage I told you now, BR, OR and then CG. CG approval is not needed in all the cases. CG approval is needed in certain cases only. If you comply with conditions given in part 1 of Schedule 5, no need for central government approval at all. But if you don't comply with these conditions, then also you can be appointed subject to approval by CG. How do we get approval by CG? For that, we file the form MR2. It has to be filed within 90 days of board resolution, and when we file that form, CG will either approve our appointment or it will reject our appointment. If we don't get the approval, then the person so appointed cannot continue as the managerial personnel. Okay. So what are the conditions which are given in part 1 of Schedule 5? There are 19 acts. If someone has been imprisoned even for a single day under these 19 acts, you have not complied with the conditions of part 1 Schedule 5, and hence either don't be appointed as MD, WTD or manager, or if you want to be appointed, seek government approval by filing MR2 with central government. Clear? Moreover, if you have been fined under these 19 acts for an amount exceeding 1,000, then also the same thing applies. What are the 19 acts? Central Excise Act, Customs Act, GST, Wealth Tax, Income Tax, FEMA, PMLA, SCRA, SEBI, Companies Act, Competition Act, IBC, Stamp Act, SICA, Food Adulteration, Essential Commodities, Fugitive Economic Offenders, Foreign Trade Act, Industries Development and Regulation Act, right? So you don't have to learn every act name by name, but you should be able to recall whether this is, if you hear a name, you should be able to recall whether this particular act is under those 19 statutes or not. So that is something which is important for you to learn. Next, if your convicted person is appointed as MP with approval of CG, no approval required for any subsequent appointment. Simple meaning that once you have taken CG approval, you don't need this approval again. You don't need this approval again. Second thing, so we have basically 4 conditions given in part 1 schedule 5 which needs to be complied with by a person who is proposed to be appointed as a managerial person. If he does not fulfill these conditions, then his appointment is made subject to CG's approval. If CG doesn't approve, his tenure will terminate immediately, right? What are the 4 conditions? First is imprisonment or fine under 19 statutes. Second is detention under Conservation of Foreign Exchange and Prevention of Smuggling Activities Act. So even if you have not been imprisoned, you have not been fined, but you have been detained for any inquiry or for any purpose, then also you have not complied with the conditions. If you have completed the age of 21 years and not attained the age of 70 years, that means if you're below this or if you're above this, you have broken the condition. You must be the resident of India. So if you comply with these 4 conditions, that is no imprisonment, no fine under 19 statutes, no detention, attain the age of 21 and not attain the age of 70 and a resident. If you comply with all these 4 conditions, then you can be appointed without CG's approval just by passing BR plus OR. Otherwise, you need CG approval as well. Otherwise, you need CG's approval as well, right? Apart from this, what do we have in appointment part? See, whenever you are calling a board meeting or a general meeting for the purpose of appointment, then you will clearly specify in the meeting that what are the terms and conditions of appointment, what is the remuneration that is being proposed, and other important details, right? Section 196(4) and Section 196(5) does not apply to a private company. Section 196(2), 4 and 5 does not apply to a government company, as I have already told you that. Whatever appointments you're making, rather whatever forms you're filing, be it MR1 or MR2, it has to accompany the mandatory attachments. In MR2, you also have to furnish the copy of board resolution plus the copy of OR or SR. You will tell to the government that our board has approved, our members have approved the appointment, and now it's your turn because he is not complying with the conditions of part 1 of schedule 5. So you give the permission so that he can continue the appointment. And when you're filing MR1, it has to have board resolution along with it, and it is going to be, of course, certified. Fine. Okay, so we proceed further. Next is our managerial remuneration. Managerial remuneration, we don't get exact how much should we pay to our directors, rather we get an upper capping or upper limit as to what is the maximum remuneration that we can pay to our directors, to our manager, to our non-executive directors. There are 2 cases of remuneration. One is profits and one is loss or inadequate profits. We have in detail discussed about what do you mean by inadequate profits and when can we identify whether the profits are adequate or inadequate. Moreover, you understand profit and loss very well. So if there are ample of profits, there are adequate profits in the company, the overall maximum managerial remuneration limit is 11% of net profits. What do we mean by net profits over here, ma'am? Net profits will be computed according to section 198. Okay, fine. Supposedly we want to pay more than this particular limit, we need to get authorization in general meeting if we want to pay more. Authorization means simple resolution. Now, this 11% limit is the overall limit. We have 4 sub-limits also. 5, 10, 1, 3. When we are paying to our managerial personnel, if there is just one of them, 5% to him, maximum that can be paid. If there is more than one, then 10% is the maximum that can be paid to all of them. To other directors, if there is managerial personnel, that means he is there to work, so only 1%, and if there is no managerial personnel, 3% of net profits is the maximum that can be paid to them. Supposedly, we want to increase this limit. We can increase this limit by passing SR. But we want to pay our directors more. We want to pay our directors more than the limit which has been specified in the Act, but we don't have money to pay to our debenture holders, to repay our creditors, to repay our loan. In such a situation, Companies Act doesn't allow you. It tells you that first you obtain the approval of people you haven't paid their money. So if there is a default and repayment of dues to bank, public financial institution, to the debenture holders, to the secured creditors, so take their approval and then you take the approval of members for paying more. Okay, so prior approval of bank or PFI, in case it is applicable, and SR if it exceeds the above specified rate. If it exceeds the above specified rate. Okay, fine, ma'am. Now, supposedly the company does not have adequate profits. There are losses in the company. Then whatever payment is going to happen will happen according to Schedule 5. Schedule 5 has different parts, Part 1, Part 2, Part 3, Part 4. Part 1 relates to appointment, we have discussed. Part 2 is divided into further 5 sections. We have Section 1, we have Section 2, which is the most important one over here. Section 1 tells us that if company has profits, pay according to Section 197. But if company doesn't have adequate profits or if there are losses, then pay according to this schedule, Section 2, Item A and Item B. What is it, ma'am? Item A is the limit given based on effective capital. What is the limit given, ma'am, based on effective capital? If your capital is less than or negative or less than 5 crore, then you can pay maximum managerial remuneration to your executive directors plus managers 60 lakhs, to others 12 lakhs. If it is 5 crores or more but less than 100 crores, then 84 lakhs, 17 lakhs. So exactly divided by 5 comes out your limit to other directors. If it exceeds 100 crore, if it is 100 crore or more than that but less than 250 crores, then 120 lakhs and 24 lakhs. If it exceeds 250 crore, 120 lakhs plus 0.01% of whatever is the excess to 250 crores. Likewise, 24 lakhs plus 0.01% of excess. Right. So this is the limit which has been given under Item A. How do we calculate effective capital? Effective capital means paid up share capital, securities premium, your loans, your reserves and surplus, minus your investments, minus your losses, minus your preliminary expenses. So you get the figure of effective capital. Right. So whatever is the effective capital, supposedly you want to appoint a person as managing director, but you know that your company has been into losses for the past 10 years. Now, whenever you are going to fix his remuneration, you know that you cannot give him remuneration 11% of net profits. How? The company doesn't even have profit. So you know the maximum remuneration that you can pay to him in case of losses is calculated according to Schedule 5, Part 2, Section 2. So you come here, you check the effective capital of the company. Supposedly the effective capital of the company is 2 crores. So now you know that you can maximum pay him 60 lakhs per person per annum. 12 lakhs per person per annum. That is for other directors, and this is for executive directors plus manager, right? But these limits can also be increased provided you pass a special resolution, right? Okay, fine, ma'am. Now, what is item B? Item B tells us about the appointment of director or managerial person in the professional capacity. What is professional capacity? Someone who is not holding the shares of the company or holding a subsidiary except for ESOP, and that too just 0.5% of the paid up share capital. Just a second. So if you are not holding any shares in the company, if you're not connected to the promoters, if you're not connected to the directors of the company, you're not related to them, and basically we are trying to eliminate the promoter group, and you have the graduate level qualification. So if you have all these three, then you can clearly say that I am a director who is working in the professional capacity. If a person is working in the professional capacity, then he can be paid remuneration according to item A. That clearly means that in case company doesn't have adequate profits, they are suffering from losses, then they can pay remuneration to their directors, who are working in professional capacity. Like if we have Reliance Industries Limited, there may be Mukesh Ambani. He is not a person who is working in professional capacity. Why? Because he is connected to the company, he is related to the company, right? So someone who is working in a professional capacity can also be paid remuneration in case of losses, in case of inadequate profits, when SR is passed. So for such appointments, you need SR. I have told you the whole history, why law is harsh over here, what is the logic behind everything. But as of now, the only thing that you need to remember, just a second. The only thing you need to remember over here is that if you fall under item A, you have to pay, that the company can pay maximum managerial remuneration based on effective capital. And if you don't fall under item A, if you fall under item B, then also the maximum managerial remuneration that can be paid to any director is according to item A. So ultimately what you have to remember is the chart of effective capital, right? So effective capital, whatever category you fall into, you will pay remuneration according to that effective capital. Clear? Okay. So that is item A and item B. Now moving further, because we have a lot in schedule 5, first of all, let's try to wrap up schedule 5 and then we will switch to other points given in section 197. We have certain special cases also. Certain special cases as in the remuneration. Okay, before that, certain special cases, if the company has inadequate profits, or if the company, this I have already told you, if the company has loss or inadequate profits, then if the director is employed in professional capacity, then he also may be paid remuneration according to item A only. What is item A? Item A is according to effective capital, right? If you want to increase even beyond that, SR is needed. If you want to pay within the limit given in schedule 5, no SR is needed. But if you are falling in the item A, then SR is needed even if within the limit. Fine. Now, limits under A or B are going to be available if, or you can say pay according to item A and B if. So these are the 4 conditions which must be satisfied, then only you can pay according to section 2 of part 2 of schedule 5. That means if a company has inadequate profits, you can pay within the limit of 60, 84, 120 and 120 plus 0.1%. Likewise 12, 17, 24 and 24 plus 0.01% to executive plus manager and to other directors if these conditions are complied with. That means you obtain the approval of NRC or board, there is no default in payment of dues, and if there is default, then prior approval of there is obtained, OR or SR, if it is within the limit, OR, if it exceeds the limit, SR, and details in explanatory statement. So there are certain general disclosures, certain information about the company, about the appointee, etc., etc. All that has to be given in the notice of general meeting. Okay, fine. Then we have some special cases. In these cases, the remuneration can be paid even more than given in section 2 of part 2 of schedule 5. If the remuneration is being paid by other company and in that company it is within the limit of managerial remuneration, plus you can say that it complies with the conditions of section 197, right? So if it is so and the remuneration to this company's directors are being paid by some other company, then that is permissible. If it is a new company, then for the first 7 years it is permissible. If it is a sick company and has been referred to BIFR, then for 5 years it is allowed. If it has, if a resolution plan has been approved with respect to a company under IBC, then for 5 years it is allowed. If the remuneration is fixed by NCLT, then it's allowed. Provided all these cases, remuneration will be allowed if the remuneration is not being received by some other company. If I have a managing director at 2 places and at some other place I'm receiving remuneration, then I cannot be paid extra remuneration if I fall into this category also. Certificate of no objection from creditors for extra payment. Certificate of no default to creditors. So these are the 2 certificates that will be made by the company secretary, and these are the 2 certifications that we need apart from a confirmation that the person to whom remuneration is being paid is not deriving remuneration from any other company, right? Of course, all these cases that I am discussing with you are not so important ones. Now, one more thing that is given in schedule 5, although it is given at the end, but I am discussing it with you right here. Okay. A person is a managing director in 2 companies. We usually think that we have to check limits for the respective companies only. That means he is an MD of A Limited. We have to check the maximum managerial remuneration in A Limited. And if he is the MD of B Limited, we have to check the maximum managerial remuneration in B Limited. Mr. X can get maximum from both places. It is not so. He cannot get maximum from both places. His total remuneration cannot exceed the maximum of the highest of all the companies from which he is getting remuneration. So this is one small point that you have to keep in your mind. Now, apart from that, we have section 4, which talks about the perquisites. Perquisites which are not part of managerial remuneration. One disclaimer I'm giving right here, this is just revision and recalling of all that we have studied in absolute depth, right? So if you have forgotten the provisions, please refer to the original videos, then only you will be able to recall the complete concept. If you remember the concept, then this revision is going to help you in immense manner. Now, perquisites, some perquisites which are being paid to the director do not form part of the managerial remuneration. What are they? If there is contribution to PF, gratuity up to a certain level, leave encashment. So these 3 perks will never form part of managerial remuneration, just like sitting fees doesn't form part of that, right? But if it is an expatriate person, then children's education allowance, holiday passage, as well as that leave travel concession, that is also not going to form part of the managerial remuneration. Okay, so that was about schedule 5, a lot of content. Now we come back to section 197. Section 197 tells us the case If you have adequate profits, you have a limit. If you have inadequate profits, you go to Schedule 5. And we have read about the whole Schedule 5 over here. Now, what else is there in section 197? Because it is a huge section. How can we pay remuneration? We can pay it as monthly, we can pay it as percentage of profits, or it can be a combination of that. How do we determine remuneration? If it is given in articles or 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 SR, if articles say so. Now, excess remuneration, supposedly any director receives excess remuneration, then that has to be refunded to the company within 2 years. This refund can be waived if SR is passed, but before passing SR, you need approval of bank or PFI if there is default. Okay. Whatever you are being paid other than or whatever you are being paid in professional nature, that is not going to form part of your managerial remuneration. Usually the rule is that whatever company pays has to be within that limit of 11%, because it is considered as managerial remuneration. But your sitting fees is not considered as managerial remuneration. Your amount that you are paying in excess of in your professional capacity, that's not considered as managerial remuneration. Example, a doctor is also MD. So as MD, whatever he is drawing is managerial remuneration, but as doctor, if he gets some visiting charges, that is not managerial remuneration. That will not be considered as a part of a managerial remuneration, right? So when it will be considered as professional, if the services are of professional nature and director has such requisite qualification according to board or NRC. Now, sitting fees that can be paid over and above remuneration, we have to keep in mind maximum sitting fees that can be paid to anyone is 1 lakh. But one more thing that we have to keep in mind is that whatever you pay to a woman director as well as independent director should not be less than what you pay as sitting fees to other directors. So this is also one thing that you have to keep in mind. Okay. Section 197 is not applicable to government company when there is no default, of course, and Schedule 5. It's not applicable to government company. Section 197 is not applicable to government company, and this is only for, of course, public company, because in the very beginning it's written that the remuneration payable by a public company shall not exceed. So, of course, this section is not for private company as well as not for government companies. Now, apart from that, we have certain certain requirements, disclosure requirements, which is for every listed company. So listed company has to disclose that median remuneration, the increase in remuneration, increase in median remuneration, the permanent employees, average increase, average, that is average percentile increase, then whatever remuneration you are paying according to the remuneration policy or not, the name of top 10 employees who are drawing the highest salary, the names of employees, names and details of employees who are drawing salary more than equal to 102 lakh per annum. If they are employed for part of the year, more than equal to 8.5 lakh per annum, per month, right? So all these details are also needed. These are disclosure requirements which are needed. Now, apart from that, any insurance premium that is paid by the company to secure the liability of directors shall also not form part of managerial remuneration till the time the director is proven guilty. Okay. And then you have punishments, penalty for non-compliance, etc. Okay, moving on to our next section. Before we move on to section 199, let's quickly recall section 198. What is not to be or what is permissible credit? We have 4 things. What is allowed as income? What is not allowed as income? What is allowed as expense? What is not allowed as expense, right? So government subsidy allowed. Securities premium not allowed. Whatever you get from profit from reissue of forfeited shares not allowed. What you get on profit on sale of undertaking not allowed. Then profit on sale of immovable property, fixed asset over and above the original cost not allowed. If there is change in carrying value, not allowed. If this is revaluation profit, notional gain, not allowed as a credit. Now we come to debits. What is allowed as a deduction? Working charges, depreciation, bonus, special tax, interest on debentures, on secured loans, on unsecured loans, charitable contributions, whatever repairs are there, brought forward adjusted losses, compensation, insurance, bad debts, all these are allowed. What is not allowed? Income tax, not allowed. Any voluntary compensation that you are paying, that is not allowed. Then change in fair value and loss on sale of undertaking, that is also not allowed. So you have to keep in mind what is allowed and what is not allowed. Then we have a section 199 which talks about recovery of remuneration, not in the case where you have paid excess remuneration because you could not ascertain net profits in advance, but this is a case when the restating of financial statements occur. So in case of fraud, in case of non-compliance to accounting standards and all, you have a chance that there is a possibility of revision of financial statements. That means you are recasting your financial statements. It may lead to a situation that your net profit is reduced and thereby the overall limit of remuneration is also reduced and you come to know that you have paid excess remuneration. So in such a situation, company has been given the power that can recover the remuneration from MD, WTD, CEO, manager, whether past or present. So it can be past also. Maybe the person is now gone and now you are revising the financial statements of some old tenure and you come to know that okay, we have paid excess remuneration. So that is something which has been given power over here. Now, apart from this, section 200, a very small section again, it empowers the company to fix a limit. A limit on what? A limit on the remuneration. Supposedly the company has inadequate profits or losses. In that particular situation, company can fix a limit. Company can say that okay, Schedule 5 gives us the maximum limit of 60 lakhs, but we say that you are being appointed at a remuneration of 5 lakhs per month, but we will not pay you more than 2 lakhs if there is a case of losses, right? So they can do this while granting approval with respect to appointment or remuneration of MD, WTD, manager. Then we have a section, compensation for loss of office, section 202, an important section from your examination point of view. Who is entitled to compensation? MD, WTD, manager and no other person. When is entitled to compensation? When there is a loss of office. When there is a loss of office. Fine. So if their office expires before their term, they have been appointed for 5 years, but they have been removed by the company after 3 years. So for 2 years, they will be paid compensation. What is the maximum compensation that can be paid to them? Lower of your unexpired tenure or 3 years. So if your unexpired tenure is 4 years, you have just completed 1 year and 4 years are remaining, you will get compensation only for 3 years. But if your 2 years are remaining, then you will get compensation for 2 years only. So whatever is your unexpired term or 3 years, whichever is lower. What remuneration will I get actually earned? How do I calculate it? Based on average of 3 years profit. If I have not worked for 3 years, such shorter period. Okay. There are certain cases where this remuneration will not be allowed. What are the cases? When the director has got another office pursuant to amalgamation or reconstruction, when the director has himself resigned, when the director, any disqualification is attracted to him and he has to vacate the office, when due to the negligence of director winding up has started, when not due to negligence of director, winding up has commenced either before leaving or within 12 months of leaving, and the amount after repaying all liabilities are not even sufficient to repay share capital. So in such a situation, his compensation will not be paid. and if he is found guilty of fraud or breach. Okay, if he is found guilty of fraud or breach. Again, an important section from examination point of view, appointment of KMP. This actually does not prescribe us the whole process of appointment, rather tells us the requirement of appointment. Listed company and public companies with paid up capital of more than or equal to 10 crores, it is mandatory to have these three people. Three for different set of things to manage the business, to manage the finance, and to manage the compliances. MD, WTD, manager or CEO, any one of them, and CFO and CS. Moreover, there is a rule which tells that private company with paid up capital more than equal to 10 crores has to appoint a CS. Only a CS, not others. Others are not needed. So a private company may or may not have MD. There is no requirement that you must have MD. And even in public companies, there is no such requirement. But if your public company has paid up capital more than equal to 10 crores or it is a listed company, then certainly there is a requirement, right? How are they going to be appointed? Of course, we have read about the appointment of these people. It's going to happen according to section 196 only. However, CFO, CS, they all will be appointed by passing a resolution at board meeting. If the office of any of these becomes vacant, that is the situation of casual vacancy which has arisen, it is going to be filled by the board within 6 months of the vacancy, at board meeting only, fine. Now there is one more requirement, that one person cannot be MD as well as chairman at the same time. However, it is permitted if the article so provided, the company does not carry multiple businesses, or even if the company carries multiple businesses and it has appointed CEO for each business. It has appointed CEO for each business. Okay. Now, a person can be maximum MD in 2 companies, and that too if specific notice is sent and unanimous resolution is passed at the board meeting of the second appointment. And if you talk about KMP, one person can be KMP in only one company. It can be KMP in more companies also, provided those companies are only subsidiaries, right? However, he can become director with the board's permission, that's not a problem. And lastly, we have one more section, secretarial audit. It is again needed for certain big companies only. So we have listed company, we have public company with paid up capital more than equal to 50 crores, and we have public company with turnover more than equal to 250 crores, or we even have, it is also applicable to every company having outstanding loans or borrowings from banks or financial institutions more than equal to 100 crore. So in such a case, they have to get their secretarial audit done by a CS in practice. The report is going to be in form MR3, which is going to be annexed with the board's report. And just like an auditor gives a qualification or remark, the board replies to it, gives his explanation. Just like that, if CS also brings a qualification or remark, the board, it is the duty of the board to give an explanation on the same. After that, we have section number 205, which talks about the duties of company secretary. What company secretaries have to do. See, company secretaries are the king of compliances, right? So they have to check the compliances undoubtedly. So they will guide the board of directors about the compliances. They will also be responsible in convening the meetings, obtaining necessary approvals, presenting themselves in the front of authorities or regulators. Whatever board tells them, they are going to perform that. Whatever articles, whatever act tells them, they are going to do that. They have to ensure two compliance with the act and compliance with the secretarial standards. That's very important. And of course, perform the duties which are being entrusted to it through act or through board. In this particular chapter, we have discussed one case law of Bell versus Lever Bros, which you have to remember, Okay, fine.